As new investors come to the stock market, a lot of them approach it one way, and I have thought of doing an article called 10 Ways to Cock Up the Stock Market, and there is in fact a good article in the best way to cock up the stock market, and let me give that to you. The best way to cock up the stock market as a new investor is to think that the way to handle investment is to trade individual stocks using a newsletter. There are lots of newsletters that will give you stock tips, or simply your friends may encourage you to go and buy whatever they've just bought that went up, and you think there's this great party going on, and so you set up on a platform and you start trading individual shares. Can I just tell you, especially if you are a younger person, your most marvelous asset is your long run up to retirement, and you need to view the stock market as something that needs to be used for your benefit in the long term, not in the short term. If you're coming to the stock market in the short term because maybe your friends are telling you, your friends will never tell you when they've lost money. Maybe your friends have made some money in the stock market and they're telling you need to come and play with the stock market. If that's how you approach it, you might as well put 10 grand in a TAB account and start punting on the horses, because you're going to lose your money. If your first experience of the stock market is to work in a restaurant and save yourself $5,000 earning $26 an hour, and you've achieved this, and you think finally sensibly, I am now going to go and invest this money, and investment apparently is fantastic, so I'll grow my money and I won't have to work. You will, however many hours you spent working behind a bar, you're just going to blow all that. And you're going to blow all that because you're going to be trading in individual shares, and you're going to be trading on tips. And that is the best way to cock up the stock market. And it's the best way to lose your $5,000. And it's the best way to have the worst experience possible starting out in the stock market. The best experience you could have is to recognize that you have, as a younger person, you have a very long run up. If you're talking about asset classes, my generation, in the opinion of younger people, fluked the property market. We fluked the property market. Property market did fantastically for me over 40 years, and that's how I've built wealth, amongst other ways. But you might be thinking, I'm not going to pay $1 million for a house in a suburb where I don't want to live, pay a huge mortgage to the CBA, be on the other end of compounding, the other end of the eighth wonder of the world. I can't do that. How am I going to build assets the way my parents did? I'll tell you the way you're going to do it. You're going to do it in super, by taking super seriously, which a lot of us didn't. You have a 40-year run-up. You're allowed to put X dollars into super every year. And if you really want to build an asset for retirement, your best bet, as far as I can see, your best bet is to take super seriously. And if you start out by taking $5,000 of hard after-tax cash and betting on individual stocks in the stock market, you're almost guaranteed to lose it. And that will put you off the far more serious and profitable and sensible way of looking after your money and building for the future using the stock market, which is to take a long-term view and not to trade individual shares. That is a betting approach. And if that's the way you start the stock market, let me tell you, you will probably never touch the stock market after you've lost your first 5 grand. Hi, it's Marcus here. If you want to see what Marcus Today does, looking after portfolios, giving you daily ideas, running the very successful strategy portfolio, go to marcustoday.com.au and sign up for a free trial.